last 10 years have been particularly, a lot of things have happened at the company level. Talk to us a little bit about how Edelweiss as a group has evolved in the last 10 years out of the entire 21-year journey.
So for us, there have been phases as we have grown. So we started in 1996, and from 96 to 2000, the first 4 years were where the foundation got staged. We did a little bit of things out there. Then 2000, 2004 was a fair amount of consolidation. Even that was a fairly bad period. 2001 to 3 was not a great time for the world economy, for Indian economy. But that is where we set a lot of the new businesses. Then 2004 to 8 was hyper growth. We grew almost 300x in those 4 years. Then between 8 to 12, again, there was re-engineering. We changed from a capital markets firm to a broad-based financial services firm, started credit and distressed assets and all of that. And between 12 to 16, 17, now again, very high, we've been growing at 35 to 40% a year. So what we have seen is there are cycles and there are phases. And actually to use the down cycles very effectively is actually one of the core competencies of a company. So we have always used the setbacks when the economy is slow, when there is a cyclical downturn, to use that to strengthen the organization, invest in people, strengthen business, because that is when you are most efficient. When resources are not easily available, we all find those real pools of efficiency, creativity, ideas, innovation, all of that. The hardest thing at that time is to keep your emotional and financial capital intact. Because you have to make sure that in a down cycle you don't end up losing either your emotional capital or financial capital. Even financial capital is easy to protect, but emotional capital, people become very cynical, very skeptical, and usually it is says that it is darkest before the dawn.
Right.
So when things are truly bad, I think keeping an eye on the future, and what we say in Edelweiss is have a bifocal vision, have your one eye on the long-term India opportunity, which is fabulous, and the other eye on the short-term issues that are there here. So as we say, here there are always issues, there is always an opportunity.
Brilliant.
Keep an eye there and an eye out.
Actually, you brought up a very interesting point, how to benefit from the down cycle and cut back in shape. Also, this interaction which we are having today is also aimed at a lot of people who look up to you for inspiration. So a lot is already known about the way Edelweiss as a company has evolved. Let's talk a little bit about Rashesh Shah as a person. We all know you head the organization, but talk to us, what are the kind of influences on you over the last 21 years have shaped you as a manager, as an individual, as a person, by which the younger generation who looks up the evolution of Edelweiss and you can learn a thing or two?
So I think over the years we have all been very fortunate, and I keep on saying that we all eat fruits from trees that other people have planted. So in India, when I was in ICICI, we were very fortunate that I met with a lot of entrepreneurs at that time, including people like Narayan Murthy and all. Because Infosys was a small company at that time, but again you saw the growth. I mean, I have seen the growth of Infosys in 25 years, from a small 100 people company to what it is now, a $35 billion market cap company and all of that. So we have all seen great growth stories in India, whether it's an Infosys or HDFC Bank or TCS or Asian Paints. So, and there is a lot to learn. So I think looking at these companies, reading their annual reports, also meeting the management. So I've been very fortunate. I've gone and spent time with people like Anand Mahindra, Adi Godrej, Harsh Mariwala, Narayan Murthy, and learned from them, because these are truly the icons who have created, large organizations, scaled up, especially in much harsher times. I think things have got easier in India in the last 8-10 years, but in the 80s and 90s, maybe things were not that easy.
Sure.
But there are people who have built great stuff in India, and also there are a lot of other, companies globally also that we admire.
Rashesh, last couple of points, via various ends of your big business, you are interacting with some of the marquee investors globally, and probably that's the reason they are also participating in your company in the form of shareholding now, on the one hand. On the other hand, you have very good pulse of the big wealthy of our society, of the business world. How are they positioning, they have become a very big force in the market. How are they positioning themselves into the stock market? Real estate is not doing that great, probably debt is over.
You see, what happened historically for a lot of Indian wealth, a lot of people were very comfortable keeping money in the bank because interest rates were good. You were getting 9-10% interest rates in banks, or you were coming into stock market or a lot of people were investing into real estate because real estate were giving you 14-15% return per year. I think in the last 5 years that has changed. As interest rates in banks have come down, real estate has not given those kind of returns, has been more flattish. More and more people are saying, where do I invest? And now they're coming into bond market. In fact, last 3 years, one of the hidden story of Indian money coming into bond market has been a great opportunity. They are coming obviously into equities, through mutual funds, SIPs. They are also investing through insurance for long-term, accumulation. So I think increasingly financial assets are growing, and things like real estate and all has gone down. And in financial assets also, the bank deposits are going down because interest rates have come down, and they are more moving to insurance, mutual fund, stock market, all of that, which is great for an economy point of view because this is truly risk capital. This can allow the economy, the entrepreneurs to take risk and really build out businesses. So capital formation is now starting to happen, and I'm fairly bullish. So though people say that credit growth is slow in India, I think capital formation growth is still going on.
My last question to you is, for viewers who are watching this, younger ones who just come into the capital markets or have been around for sub 5 years, what are the 3 principles of managing money or handling money or investing as a guide you would like to tell them so that they can become successful investors and create some serious wealth over the long term?
I think if they are constantly watching your channel, they're obviously getting a lot of wisdom from a lot of people. But I would say first principle is think long term, because investing is a compounding game. It's a long term game, and between 20 years and 30 years can make a huge difference. And if you, as you said, your viewers who are younger, they have this particular benefit of having the long term. One of the strange things happens when you're very young, you're also very short term oriented. When you get older, you become very long term oriented. Ideally, it should be the other way. So I think when you are young and being long term oriented and thinking in the next 20 years is very important. The second thing I would say is you make your mistakes, make them as affordable as possible, as small as possible in the early part. So don't go and borrow a lot of money and bet your house on that, and don't take too many risks so that it will hurt you. When it hurts you in the early part, then you become so risk conscious and risk averse that you won't be able to capitalize. And think of this as getting better and better at investing over the next few years. And this is like a old wine that has to get better with age, and that is and the third I would say is keep your emotional capital. I mean, this greed and fear and getting very panicky is very easy, but as Hindi mein we say, mansik samtulan is very important. So keep your mental balance and ultimately, as somebody has said, investment should be there to allow you to sleep at night. If they keep you awake at night, then something wrong is happening. So make sure that you have an investment strategy that allows you to sleep well at night.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.